Welcome back from that short break. Here we are talking about the recent reduction of interest rate by Central Bank of Nigeria. After 5 years, we are having a reduction in our interest rate. The last time we have a reduction in interest rate was in 2020, September 2020. But here we are, September 2025, we are having a reduction in interest rate. Joining me right now is Dr. Samson Simon, Chief Economist, ARKK Economics Data Ltd. Doc, a good day to have you on the show, sir.
Thank you for having me.
All right,
Good afternoon, viewers.
All right, so let's get down to the issue. First, what do you make of the CBN PC MPR rate cut to 27 from 27.50?
It has been a long time in coming. We have seen sustained disinflation for 5 consecutive months. Our foreign reserves accretion has remained relentless. We have reached a 72 months height. We have seen stability in naira dollar exchange rates. We have seen improved economy. I know some people say they have not been translated, but the truth is that the numbers are actually good. Even our oil production, and then the price of PMS, so even the price of food, though that's categorized under inflation. So there has been a lot of improvement. The numbers have been leaking up, and it was just a matter of time before the central bank was meant to cut rate. And by changing gear from hiking rates to even holding it steady for a while, it shows that the next thing could have been anyone. It could have been cut, or it could have been a hike. And because the numbers have been largely favorable, so the cut was more likely than a hike. And we know that the ideal inflation level, the CBN governor was explicit yesterday when he said the objective is single-digit inflation. So we are not there yet. We might be doing 20%, but which is way lower than what we had earlier in the year. But where the target has not been achieved. And I think they did the right thing by being really conscious, by just cutting it by 50 basis points. They could have done more, but because we know the target has not really been achieved. And mind you, the Fed also cut interest rates. So their fear that should we cut interest rate, that would stop foreign portfolio investments from coming in, and eventually a reduction in our foreign exchange reserves and so on. Because the Fed cut interest rate, that's the central bank in America, and other central banks around the world have been cutting it. So we'll stay largely competitive despite cutting interest rates. So I think it's the right thing to do. And let's see how it impacts the economy generally. We hope that it will make the economy, even though growth has improved, like in the first quarter, we did 3.13%. In the second quarter, we did 110 basis points better. So we hope that it will even be better now. It will even be better than, the growth will be better than the second quarter. It will even improve because of the cut in interest rate, because trading will become more affordable, and there will be more disposable income for people to spend, and ultimately we will experience better growth and better economic activity.
Exactly. And talking about the growth of the economy, for the CBN, according to the governor, the CBN governor, Dr. Yemika, he said the main aim, as Riley pointed out earlier, was to push for balance and push for growth in the economy cautiously. He used the word cautiously. But from what he's saying, what do you make of the cautious aspect of the word? Because when we say we are doing it cautiously, that means let's have a view on that, sir.
The thing about monetary policy, and largely being shown by the interest rates, the ARKK rate that is being set by the central bank, the policy has long and variable impact. So you might have implemented a policy maybe a year ago or 2 years ago. It's not the same result. And now that you are tweaking the policy, maybe is in even an opposite way from what you have been doing for a while, the impact may take a while. So you have to be careful when you implement a certain policy, when you tweak a certain parameter. You have to see how it impacts things before you can say, all right, are we going on that same trajectory, or are we going the opposite direction, or are we maintaining status quo? So it's something that you have to be very cautious about. is something that you don't rush, you're being careful, because ultimately the results are what really matter about the action. So you want to see how the results play out, how they pan out. That will determine the next course of action to take.
Exactly, interesting. But let's take a look at other parameters that have been taken apart from the MPRA. Let's take a look at the 45% that was retained for cash reserve ratio. What do you have to say about that?
The cash reserve ratio was also cut by 50 basis points. It has been 50%, meaning that 50% of every deposit should be kept in reserve by commercial banks. So that half of whatever deposits that should have come should have been sterilized. But with this 5%, it's going to free up 5% of whatever deposits that banks have for them to lend to consumers, to lend to businesses, to lend to investors. So that is going to free up resources, and we hope more liquidity will be seen in the market, and hopefully better economic activity. But I like what they did for the fact that they cut the cash reserve ratio generally by 50 basis points, from 50% to 45%. They introduced something new that it should, the non-TSA deposit, public sector deposits, they introduced that one, and they said it should be 3/4 of that should be sterilized, should be kept in reserve. So indirectly, while they want to stimulate growth, while they want to stimulate economic activity, they want to free up resources for banks to lend to businesses and to consumers and hopefully stimulate economic activity. They don't want to abuse it in such a way that it also spurs inflation, it stokes inflation and makes it worse. So they introduced that variable to make sure that they largely control things. And I think that's smart of them. So we're hopeful that this will bring desired results.
Talking about the new parameter they just introduced, 75% for the non-TSA, cash reserve with them. Well, a lot of people are asking, won't this also in a way, stiffen liquidity in the economy? And again, there are people who are asking, is it on non-TSA or TSA? Can you help us to expatiate on that?
It's explicitly non-TSA. TSA account is not domiciled with commercial banks. So,
exactly.
And with the Tinubu administration now, the TSA is not following the same modality that it was following under the Buhari administration. So there's some sort of liberalization. And the fear by the central bank is that when you liberalize a certain policy, when you make it easier, that's what I mean by liberalization.
Exactly.
When you make it easier for people, you don't impose certain strictness that was there, people might abuse it, and that may spur increase in money supply and ultimately stoking inflation. So I think it's a smart move. It's a balancing act. So one has to be careful. The central bank said he has to be cautious. The central bank governor said caution should be used.
Exactly.
I think that's what he's trying to do. While you're trying to stimulate growth, right, you may end up making inflation to be worse. And while you're trying to bring down inflation, you may actually stifle growth. So what he's trying to do is, all right, by reducing the cash reserve ratio, for general cash reserve ratio for all deposits by 5%, that will free up 5% of depositors' funds now that should have been kept in reserve, right?
Exactly.
But in the same breath, he's trying to say, all right, it's not everything. So they want the commercial banks now to focus more on getting deposits from individuals and from businesses instead of getting deposits from government. So it's a strategy, and it's a risky too. So, but we're hopeful that it will yield the desired results and will spur commercial banks to look for deposits from the private sector, whether households or businesses, instead of fighting to get funds from the government.
Interesting. But let's also consider the 16% of merchant banks. Many Nigerians, in what I've found so far, a lot of people are yet to understand how to apply for credit facility with merchant bank. But here we are, merchant bank have 16% cash reserve ratio. What's your take on that?
Well, for the merchant banks, the banks, for the investment banks, that 16% has been retained. And the reason why, if you look at it, for merchant banks, the cash reserve ratio is lower than for commercial banks or deposit money banks, is because merchant banks largely largely lent. That's like the only thing that they do. While for commercial banks or deposit money banks, they have other activities that they can generate money from. And you cannot compare the number of customers of merchant banks and the number of customers or depositors for commercial banks. So merchant banks do not have that leeway. They do not have that leverage that you can say, all right, 50% should be sterilized. They don't have that capacity. You are indirectly killing them. So that's why their own cash reserve ratio is way lower than what you're asking commercial banks or deposit money banks to keep.
Interesting.
Yeah, than what the merchant banks are expected to keep, almost by a factor of 3, 16% and 45%. So merchant banks also, because you're trying to reduce the objective, the ultimate goal is to bring price to target. And you cannot say you're bringing price to target by only implementing policies around deposit money banks. The merchant banks too should have would have been opted. And despite the fact that they are loosening the stance now, they are embarking on an expansionary monetary policy. They are trying to ensure that there's some easy money. That is not really applicable to merchant banks, at least because if you look at their CRR, it's way lower. So you don't need to reduce it further. So I think the way at 16% is okay for them. Maybe for the commercial banks or deposit money banks, eventually they will keep loosening as the macroeconomic environment keeps improving.
Exactly. Interesting. But we won't talk all this without linking it up with the liquidity ratio that they still maintain at 30. What do you have to say about liquidity ratio that the CBN still hold on to at 30%?
Well, the liquidity ratio at 30%, which is held steady, it has been 30% and they're still keeping it at 30%, is for the safety of the banks, so that the banks can meet up with their short-term obligations. They keep part of depositors' funds either in liquid assets or near liquid assets, so that they can meet up with whatever obligation. And the funny thing is that 30% is even the minimum. And some banks even keep beyond that 30% because maybe they're skeptical about lending, right? So I think it's largely okay, because it's not yet the guru. We have to tell ourselves the truth. Even though things are improving, things are looking up, that doesn't mean that we are really at a place where we say, all right, we have arrived. We have not arrived. We're still, the target is 6 to 9% for Nigeria's inflation rate. And we're doing more than 20%. So it's still way off. In fact, the global best practice says 2% or 1 to 3%. And in some countries, when inflation is around 10%, people protest because of cost of living.
Exactly.
So we're not there yet, and they have to be careful. I think by tinkering with just only maybe 2 to 3, the monetary policy rate and the cash reserve ratio for commercial banks, and maybe the asymmetric corridor, I think they have gone far enough. Somebody said it's very bold because we have not really achieved the desired results. It's just that things are looking up, at least in a sustainable way for some months now. But it's not yet the whole. So you have to be very circumspect in how you go about it, or else all the gains that you have made would be undone. So you have to be very careful.
Interesting. But let's look at the economy generally. First quarter, second quarter economy growth, GDP have shown that actually the economy is growing in a way that even the government is projecting it. 3.13% first quarter, second quarter 4.23%. But Doc, what do you make of this growth at this point in time? Particularly, one aspect of the Nigerian economy that have supported the second quarter economy is the oil and gas sector. What do you have to say about that?
Well, growth is growth. I know you want growth in all facets.
Exactly.
You want a growth that is sustainable, that is inclusive, right?
Yeah.
But any growth is better than no growth, because if we're having a recession or a depression, things would have been far worse. So I think the government deserves commendation for delivering these high growth rates. I think they're not doing badly. Of course, like Oliver Twist, we expect better results. We expect improved results, right? We want this growth to be more inclusive. We want this growth to be more sustainable. And the oil sector is really small. It's less than 1/10 of the economy. But, the growth is not just limited to the oil sector. The non-oil sector also did not do so badly, particularly with sectors like ICT and the real estate sector. So we need to make sure that the growth maintains that trajectory and possibly even improve. And other sectors that have not seen these encouraging numbers should be stimulated to produce good numbers so that all Nigerians can benefit from the expansion in the economy.
Exactly. And talking about the growth, one key aspect of the growth is the non-oil sector. Just recently, NBS released a report that Nigerian-China trade hit 15.68 trillion, 15.863 billion US dollar between January and July 2025, meaning that our non-oil sector is also performing in a very great way. But what do you have to say about this trade relation we have with China, with over 15 billion US dollar trade in just 6 months?
Well, if you look at the relationship between Nigeria and China, we are benefiting. You know, the thing is, imports are as important as exports. I know we are fixated on trying to export. There's nothing wrong, because if we are doing badly in our exports, we want to do better. And for China, I think the relationship between Nigeria and China largely favors China in the sense that China exports more than we export to China. But that doesn't mean that we're not, the relationship is bad. So what we should look at is how do you improve what we export to China in a sustainable way. And by the way, I always tell, as a college professor, I always tell my students that export is as important as imports. But there are certain things that will not encourage Nigeria to export. At the time when food inflation was going through the roof, I will never advise Nigeria to export food when we don't have enough for ourselves. So we only export what we have sufficient, that what is sufficient within our economy. And we have the capacity, and we have comparative advantage or competitive advantage in producing. So far we need to develop that capacity to produce what the Chinese need, particularly those things that we know we have really met domestic consumption or domestic demand, and we have surplus to export. China needs a lot of things. It's a big economy. It has huge population, so a lot of things can be exported. But we need to develop that capacity. We don't just sit down and assume, and we don't export what we are even struggling to supply domestically. We don't start exporting such. It doesn't make sense. So I think we need to work on that. Particularly, we have cheap labor. We have to make it very skilled. We have to be very competitive when it comes to that aspect. And then the relationship between Nigeria and China will be largely balanced.
Exactly. Let's get back to the central bank once again, because for the central bank governor yesterday, he was like an excited man who shows, excitement in what he's doing in his work. He announced yesterday that 14th out of the commercial banks in Nigeria have met the recapitalization requirement. Doc, this is a good news for Nigerian financial sector. But what do you have to say about this new development coming from the recapitalization exercise of the Central Bank of Nigeria?
I think Olayemi Cardoso has not done badly as a central bank governor. Of course, it's not perfect. It's not just it's not smooth sailing. There are ups and downs. But if you look at it on the whole, it's not doing badly as a central bank governor. And the new recapitalization exercise is going to demonstrate whether the last time we did this was more than around 20 years ago, when Soludo was the central bank governor. It's long overdue, and I think that would be a crown jewel for him if he will succeed at doing that. And thankfully, majority of the banks have shown that they're up to the task. So I remember when he came up with the policy some 2 years ago, he said they will interact on a regular basis to see how these banks are progressing, so that if there are challenges, they can help with that. And I think a large credit goes to him and to the central bank as a whole for not doing badly in that regard. And I believe it's very good, because we need our banks to be strong, to be steady, to really sustain an economy. We want to have a $1 trillion economy. The financial sector is a very important part of that, for it to lend, for people to invest, and even for consumption, because consumption is as important as production. If you produce and nobody's consuming, you cannot produce again. And we normally say production is not complete until whatever you produce has reached the final consumer. So we should not demonize consumption. Consumption is very important. Even to lend, The ability of banks to lend to consumers is also a big deal. Our credit system needs to be developed, and all these things are important, and all of them depend on a very sound financial system, strong financial system, and the recapitalization will make them stronger, will make them sounder, and that's what we need. And they'll be able to sustain the future that we want for ourselves as a $1 trillion economy in the shortest time possible.
Interesting. Doc, I can't thank you enough, but thank you so much for bringing your wealth of experience to the discussion today, particularly, the aspect of the monetary policy that guys like you are so in-depth when it comes to the intelligent and intellectualism of it all. Thank you so much, Dr. Samson Simon.
Thank you, Father.
All right, so maybe they are developing issues around the central bank, particularly the reserve ratio that have now, the external reserve that have now increased to 43 billion. We need to take you on that, but in a subsequent edition. But thank you for coming on the show right now.
Thank you.
All right, I've been speaking with Dr. Samson Simon, who happens to be the chief economist at ARKK Economics Data Ltd here in Abuja, one of the intellectual think tank economic development organization that normally advise on economic and investment aspects of the Nigerian economy. And I said it in a very simplified way. For the CBN, it is about the growth of the economy, but not just anyhow growth, but growth that can translate into something tangible and sustainable for all Nigerians. Our next discussion segment is coming up shortly, where we'll be looking at the impact of this rate cut. What is happening to the Nigerian stock market? How has the market react to this particular rate cut? That's what Mr. Kasumu Kifu will be joining us all the way from Lagos to explain and to expand the discussion in regards to the CBN interest rate cut and Nigerian stock market. Join us shortly after this break to bring it on.